Welcome to today's discussion on stock investing strategies. When it comes to picking stocks, two major approaches dominate the market: growth investing and value investing. Understanding the differences between these strategies can help investors make informed decisions tailored to their financial goals and risk tolerance. So, what exactly are growth and value stocks, and how do investors choose between them? Let's break it down. Let's start with growth stocks. These are shares of companies that are expected to grow at a faster rate than the overall market. Investors buy them with the anticipation that their earnings and revenues will continue to increase at an above-average pace. Growth stocks typically belong to sectors like technology, e-commerce, and biotechnology, industries that innovate and expand rapidly. Think of companies like Tesla, Amazon, or Nvidia. They reinvest their earnings into business expansion, product development, and market penetration instead of paying dividends to shareholders. Investors are drawn to growth stocks for their potential to deliver high returns, but they come with risks. These stocks often trade at high price-to-earnings (PE) ratios because investors are willing to pay a premium for anticipated future earnings. On the other hand, we have value stocks. These are shares of companies that appear to be undervalued compared to their intrinsic worth. Investors look for stocks that are trading at lower price multiples due to temporary setbacks or market overreactions. Exactly. Value stocks typically have lower P/E ratios, price-to-book (PB) ratios, and often pay dividends. These stocks belong to well-established industries like banking, manufacturing, and consumer goods. Think companies like Johnson & Johnson, Coca-Cola, or Berkshire Hathaway. The philosophy behind value investing is simple: buy low, sell high. Investors believe the market will eventually recognize the stock's true worth, leading to price appreciation over time. Choosing between growth and value investing depends on your risk tolerance, investment horizon, and financial goals. If you're willing to take higher risks for potentially higher rewards, growth stocks might be the way to go. But if you prefer a more conservative approach with steady income and long-term stability, value stocks may be a better fit. Many seasoned investors balance their portfolios with a mix of both strategies to hedge against market fluctuations. Diversification allows you to capture the benefits of both growth and value investing while minimizing risks. At the end of the day, there's no one-size-fits-all approach to investing. Whether you choose growth stocks, value stocks, or a combination of both, the key is to conduct thorough research and align your choices with your financial objectives.